Russ, your binary options educator here at Future X3 and Revital U. This is the next installment in our video series on support and resistance. You know our goal is to provide easy to follow trading education, provide trading ideas, create confidence in your abilities, and fortify mental discipline to handle the trading process. With Revital U and FX3, our mission is to provide a quality education in binary options, mental stability, over-the-shoulder trading sessions, enabling clients to successfully trade the Forex, crypto, and commodities markets. Future X3 and Revital, you cannot make any guarantees about your ability to get results or earn money with our program information, tools, and strategies. It is just that, as we are not trading for you. You are trading for yourself. Please use proper risk management and keep it small, guys. That is the best thing to do. What is support and resistance? Support and resistance is the most common concepts in trading. If you understand support and resistance, you're halfway there. It is so pivotal. Resistance is a surplus of sellers. Support is a surplus of buyers. When resistance happens, it's going to cause a market to push down, and there's certain areas where those buyers and those sellers don't want that market to go. So when it gets to a certain point, there'll be a surplus of buyers that will push that market back up. Setting up support and resistance is pretty much, you want to start big and then go small. At the end of this slideshow, we're going to jump into TradingView and we're actually going to set up support and resistance. But what you want to do is usually find at least 6 points where that either wick or that candle is making contact with that support zone or that support line for really making the best use of your support and resistance. Setting up support and resistance, you have to look at the overall market, and usually the best way to do that is a higher time frame. For example, this market at the very bottom, there's a very strong support because it never went below that point. And at the very top, you have a major resistance because it continues to get tested at that one, but keeps getting rejected every time it comes up to it. When you do hit pivot points, you're going to have either support or resistance that is going to be defined. These minor supports and minor resistances, they're good points to notice where there's multiple times that a particular thing is coming up to that point. And the nice thing about support and resistance is a resistance can turn into a support. Once this market is above this minor resistance becomes a minor support right over here. There's two types of traders that utilize the support and resistance as form of their trading. They're bounce traders or break traders. Bounce traders are usually people that take a trade off of either a resistance zone or a support zone and take it to go back the opposite direction. Break traders are looking for that breakout trade, those ones that blow through the support and resistance line and continue to go all the way down. Those are two very good forms of trading, and it's something that can be utilized. Usually you just need to be a little bit more patient waiting for those. We utilize 5 different EMAs and simple moving averages, which is EMAs is exponential moving average. We'll start at the big one. The white one that we utilize in trading, these are all the colors that we'll utilize too, and it will be the same thing every time so you know how to follow along. The white line is 200-day simple moving average. That one's telling you the overall direction of that market. The green line, which is the 20-day simple moving average, that's the middle of the Bollinger Bands. You're not going to add that. It's going to happen when you put the Bollinger Bands in to your trade. That's kind of the middle of the road of the Bollinger Bands, and it's really showing good trends. The yellow, the 15-day simple moving average, this guy is kind of a walking and talking moving resistance for you and a support line. As this thing moves through the market, it will be very much so a overall guide for you on where kind of that market is going to it's either going to break through or it's going to bounce off of it. So when the blue line is below that yellow line, that's acting as a resistance. When the blue line is above the yellow line, is acting as support. And then the 5-day is kind of your crazy next door neighbor kid and everything. It likes to really move with the market. You're really seeing the direction that that market is particularly moving as this line is progressing. It's a good short-term moving average to really give you insight on direction of each candle. Basically, using that moving average, as I was saying in the previous slide, in this chart you can see that with it being underneath, which the blue line isn't shown here, but underneath, it's going to act as a support. And then when a trend is going down, it's acting as a resistance line. You can see multiple points in which this bounces off of it. So now we're going to go over to TradingView, and we're going to set up some support and resistance. So right now, I'm not doing it off of the 4 hour, but this is the 1 hour. So this is the 1 hour chart. As you can see, this thing's moving pretty well. So what we're going to do is we're going to set up some support and resistance areas that we're really seeing as good. So you got 2 points right here. 1, 2. You got 3, and then you got 4, 5, and then 6 right there. So you got really good points of showing where this thing was bouncing off. Right here is another good one, because we got some wicks and we got some candles that are all hitting off of this point. Always do the tippy top. And when you have these higher time frames, the wicks do come into play. So make sure that you're utilizing those. Got some other little points right there, which I think will come in handy since the market is in this particular area. There's no need to mark down here. This market is not going to get down here in the time that you are trading. So don't worry about that one. So now we're going down to 15 minutes. And you notice everything's a little bit more spread out. Now we can find better spots for these lines. Find some more times that it hit. Good spots. All you want to do is make sure that you're hitting multiple points of contact, because we got candle, 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 candle. A couple of them go through it, but one that is tested on both sides. For example, this 15-minute candle came all the way up through, but then rejected back down. That's showing you something. That's something that it wants you to be aware of. You got a point down here. You got multiple candles right in a row, right in a quick succession, that are all ending right here. This is a very good line. And then you can get down to the 5 minutes. 5 minutes, you can utilize your stuff, move it down around a little smidge here and there if you need to. Remember, there's always a little bubble around each one of these lines that may come into play, so be aware of that. But that is how you set up support and resistance, and then you go to trading on your minute chart. You can see how these things are interacting with each other. But I look forward to seeing you guys in class. If you have any questions about any of the videos or any of the stuff that is taught in these lectures, you can always email me, or you can ask during the academy. My email is russ.vwpc@gmail.com. That's russ.vwpc@gmail.com. Have a good night, and I will see you guys all in class. Hello everybody, it's another video installment from Russ from FX3 and Revital U talking about indicators. These are the things that show us the way the market is moving. You know, our goal is to provide easy to follow trading education, provide trading ideas to create confidence in your abilities, and to fortify mental discipline to handle the trading process. You know, our mission is to provide that quality education in binary options, mental stability, and over-the-shoulder trading sessions, enabling clients to successfully trade the Forex, crypto, and commodities markets. We cannot make any guarantees because for everything that we give you, it's education-based. We are not trading your money for you. You are trading your money. It is up to you to use proper risk management in order to protect your accounts while you are learning. So let's dive right in. What is an indicator? Indicators are those things that we see on the charts, other than the actual bars themselves, they give us representation on volume, historical price, interest. It's all these indicators work in a sense to show us what the volatility is, which way the market is moving, helping us determine which way that market is moving and getting that noise out of there and make sure that we are able to make proper assessments on the direction of the market. There are 5 main types. Mean reversion indicators, those show overbought or oversold. Trend indicators show direction of the market. Momentum indicators show the speed in which it's moving. Volatility shows how much that price could move one way or another. And volume indicators measure how much volume or money is moving in the market at that particular time. Mean reversion indicators, those are the relative strength index, the stochastic indicator. They really show whether a market is overbought or oversold. And that is something that we are really grateful on being able to see whether or not that market is going to be able to keep going up, because something can't stay overbought forever and something can't stay oversold forever. Moving average indicators and the parabolic SAR and the MACD is a multi-type. They show trends. Moving averages, the higher the number, the more steady that line is, but that is showing the overall movement of